Hope everyone's doing well. Hope everyone had a good week. Let's get right into our commodity corner look ahead. We're going to focus this week specifically on what's moving, where the volatility is, where you should be preparing, what you should be looking for, instead of a complete and total overview, which is just going to be, to a large extent, not very productive because you need to be where things are moving and where you can make money. With that, let's just get right into it. Okay, so we're going to start with oil. So obviously we had the news during the week with Russia that came and went. There was a little bit of some bearish news for oil, positive news for the conflict in Ukraine. Obviously, oil took it a little bit on the chin, got as low as 62.77 on Friday. We bounced. We, to a large extent, really went nowhere after that. There was no follow through on the downside. So we hit 62.77, couldn't even hold lower below 62, came back to 63. It just really it was rather choppy after that news dropped. Then obviously we got the news yesterday from President Zelensky saying that there's going to be no option of giving land. So there's a new wrinkle here. So oil's going to open in about a half hour or so in the Globex markets. It's probably going to get some kind of pop. I wouldn't expect a massive one, but I think the market's very much in wait and see mode. People do not know what to do with this right now. They're waiting on the sidelines because, again, there's so much headline risk out there. It's very hard to figure out where it's going, even in the short term. Longer term, it's still bearish. There is bearish fundamentals driving it, but at the same time, there is headline risk. So we'll have to see how this plays out. We did on Friday make new 9, 20, and 45 days lows at 62.77. We did do it. However, we couldn't hold. So again, it's a little bit more complicated over here. We're basically towards the end of summer. So the summer driving season is over to a large extent. Granted, we do have another 3-4 weeks left, but the meat and potatoes of it is over. So any pops that would not be headline driven or political, to a large extent, out of the way. We're not really getting a lot of demand fueled rallies. It's really just more political risk. So you definitely have to be aware of that. I would, if you do have the ability, I would be watching Brent going into the morning session for New York just to see what WTI may do based off of what happens overnight with Brent. If you have that ability, if you have ICE EU to see it, you could use the BZ contract. It's not an exact, but you could use it somewhat as a guide just to have some kind of understanding of what potentially could happen. But just remember one thing, 9 o'clock, when New York opens, all bets are off and WTI is going to do what WTI is going to do. Something else you should just keep in the back of your mind is the ETFs. At 9:30 every morning, when the equity markets open, these ETFs start opening, USO and et cetera, the double and triple. So a lot of times at 9:30, you'll get like a little bit of some weird, squishy price action in the more popular commodities, whether it be oil, whether it be natural gas, whether it be gold, silver. You'll get like a little bit of like friskiness that lasts for about a couple of seconds while the equity markets are opening. So just something to be aware of. However, like I said, going into this week, it's pretty much a toss-up. Depending on what happens between Russia, Ukraine will really determine what our next move is and where we go and how we get there. Because that's really what's keeping us up right now. I would not be bold enough to start making bets ahead of it because at this point, it could go anywhere. And the last thing you want to do is create a mess. So that's going to be oil. Okay. Let's get to natural gas. Okay. Natural gas has a lot of bearish factors. It looks like we want to take out this low. We made a Globex low at 2.952. It looks like we want to take it out. There was some more bearish news that came out over the weekend, weather related. We could get a gap where we take this out. It looks like 280 is definitely looking like it might be in the cards. The only thing that's throwing things off, so to speak, is that December, January, February. So December 25, January, and February of 26. The back months are trading in the fours. So we're over $1 higher. So it's a little bit more complicated and they're really not backing off. So the backs are not really telling you that the market wants to go down. Just in general, for something to keep in mind, the real trading really happens in the backs. It doesn't happen in the front month. The backs are really what tell the story. The reason being is because commercials and producers, they're only in front months when whatever they were in the back is starting to just get towards expiration and they got to roll out of it. Outside of that, the real trading is happening in the backs. Maybe we'll do a video on that at a later date, just to go a little bit into what the backs tell you on the curve, etc. But natural gas is looking bearish. It's bearish, but it's melting. It's not, the volatility is not super duper here. It's just melting. It's more like, it looks like it wants to kind of bounce, and it looks like there could be some kind of face ripper bounce over here, because a lot of guys are late in this. So could be something. I don't know how short-lived it would be, because I think it would be just like a one-hit wonder type of day where you get like some kind of rip and that's the end of it. For right now, it's definitely hard to short it down here because you really feel like you're shorting in the hole. So it's a little bit more of a harder trade. And it's not a harder trade by shorting in the hole because of gaps. It's really just because it's just melting. And there's a little bit, I can understand there's some trepidation putting on shorts, because at any moment there could be something and then it could just rip just to pull out and clear out all the shorts, all the late shorts. However, right now, the fundamental drivers are not there. So maybe you'll get some kind of technical bounce, but it's not really oversold because it's from time. It's been consolidating over here. I still think you could take shorts in it. Just be aware that it could rip just out of nowhere. I think the better trade for a rip is a gap up. And that would make things a little bit easier, like a Sunday night gap or whatever. I think that would be a better trade. It's just not there. So now directionally, we're going down. So just go with it. Let's just go quickly into products, just quickly. Gasoline. Think about it. Gasoline, summer driving season. It never got anywhere. It's been choppy. It's been sloppy. It hasn't been doing anything. We're just pretty much reverting to the mean almost since April. Just even, you could go back even further. Look at this. You go back since September. It's just basically stuck in this let's say $2.10. We've just been stuck here. So there's nothing really going on over there. Going out to diesel, heating oil, same kind of deal. Also reverting to the mean, not really gaining any traction. Sitting around this, let's say $2.28. We're not really going anywhere. So there's no volatility here. The only thing, let's just go back quickly just to oil for 1 second. You look at oil, what really is moving oil around is political risk. That's really what's been moving it around. That's been giving it the juice that it needs, just political risk. So if we get something that's some kind of news that the war is over in Ukraine, and they do it in a way that like it'll stick, and oil probably sees a 5. Let's keep going. All right. Let's go to gold quickly. Obviously, gold is now in the news. It was a little bit dead. Now it's in the news with tariffs. There was a press release that came out over the weekend after the market was closed, trying to clarify what the tariffs are on gold bars. I think the market's calling BS on this. The market really, at this point, is focused just on tariffs. It's not even Fed, because usually gold is referendum on central banks. But I think right now gold is just literally, the new narrative is tariffs. Tariffs are moving everything around. So you got to really, really be careful of it. You got to be cognizant of it. And you really need to do your work beforehand. You need to do your homework. If you're not prepared, and if you think you're just going to come in and wing it, I have news for you. You're probably going to be sorely, sorely mistaken and severely hurt, because tariffs are coming left, right, and center. News and the tariffs. And 1 minute you're getting tariffs that are bearish for the commodity. Then you get 2 minutes later, tariffs that are bullish for the commodity. Then 10 minutes later, it gets reversed. Then 10 minutes later, then 15 minutes, that gets reversed. So it's like a wash, rinse, repeat cycle, and you really have to be careful. The algos now, or the computer right now, because of these tariff headlines, are very treacherous. Really have to be careful. Silver looks like might get the juice. You got somewhat of a V here. It definitely looks like possibly wants to take out this 40. I would take out 2011 highs, and we start making a beeline towards all-time highs, or at least $50. We should be getting there. How it gets there might be more complicated, but I think it takes a couple of days, and then maybe this thing really starts to gain some traction. The one that slowed down is platinum. Platinum obviously had this clean move up, a lot of volatility in it. Then it got whacked. Now it's just trying to figure out what to do. Now you could say this is somewhat of a bear flag. You could use that. It's possible. I think the technicals are going to be outweighed by tariff headlines. So if you're a technical only trader, I'm going to tell you from the bottom of my heart, good luck, because tariff announcements are coming hard and fast, and people do not know what to do with it. The computer is all over the place. So you really, really, really have to be careful, and you really need to know why you're getting into something and why. And above all else, know where you're getting out if you're wrong. Okay. Last but not least, I'm going to talk about copper. Okay. Obviously, copper, this is tariffs. We're not going to go over this again. It really hasn't done much since then. It's basically found its home again. There is heightened, increased volatility in it. There is a lot of news in it. I think potentially tariff news is over. So now it might just go back to being its old sleepy self. We'll see how this plays out. It's not my market, so I don't really touch it that much. I don't really look at it that much. It's not a market that I really focus on, but I know people that do, so they should know at least what's going on. Is increased volatility. You need to account for that volatility when you're looking at any of these markets, especially metal markets right now, because metal markets are somewhat in play. So if you're going to go out in commodities, what's really moving right now? It's metals. It seemed like that trade was potentially over last week, and then they just woke up with all kinds of tariff news coming and things coming out of left field and right field, and it's hard to keep up. It's really hard to keep up. We are coming in towards the end of August, so things should technically start to slow down a little bit. Equity markets, they obviously slow down. We'll talk about that on the equity side, but even in commodity markets, they start to slow down. The only reason why they're not slowing down is because there's just a lot of tariff news, and the tariffs are not really directed towards companies. They're really targeted towards more commodities than anything else, whether it be gold, copper. They're coming hard and fast. Right now, the only thing that hasn't been touched is the grain markets. Those are relatively, we'll just go through them quickly. We're here, might as well. They're relatively unscathed. Some volatility there, but they're not really clean and moving. They're just kind of doing what they do. Wheat is probably going to end up back here because you can see it's reverting to the mean all the time. This corn, looking at corn, it is definitely a downtrend. It's a slow mover. So whatever you put out, if you put things on, just remember intraday, it's definitely on the slower side. So you may not get paid to sit in it. Soybean oil, we took it on the chin on Friday with crude. Soybean oil sometimes correlates with crude, and sometimes they work very well together, and sometimes they don't. So if you're going to use soybean oil as a correlation with crude, just be a little bit more careful. I think your better bet is with the ethanol trade, which would be with corn. Okay. So one more time, we're going to end off with oil before we wrap this up. We'll see how we open tonight. I do believe that the Zelensky comments yesterday may get the market up. I don't think we're going to have huge gaps, to be honest with you, because that's really the only thing that came out. Maybe we'll sit somewhere between here and 65-ish in that range. I don't think we're going back up here. Unless something drastically changes, I don't foresee it. And then after this news come out from during the week, potentially believe if it's good news for the conflict in terms of ending it, then oil should have a fight in front of it. Take care. Good luck. And I'll see you next time.